In this video, I reveal why I don't care about a potential Pokemon bubble, using actual events and comparisons as examples. I'm Kakashi with Kanto Capital, and today I want to talk a little bit about fear. There's been a lot of talk about whether the Pokemon card hobby is in a bubble, and whether prices in this bubble is going to pop. It's understandable to have fear. I completely understand. It's healthy to have some fear, especially if you're investing in anything. But I'm going to tell you why you shouldn't have any fear while you're investing in Pokemon. And just to be clear, I'm not just telling you to have blind faith. You're going to get real reasons and real case studies to show why you should have no fear in this market. Okay, if there's anything that you want to take from this video, this is it right here, so pay attention. This is what you need to know. Bubbles in winning markets is nothing more than short-term volatility. Now let me repeat that again. Bubbles in winning markets is nothing more than short-term volatility. Now that's a lot of stuff I just said in a very short phrase, so I'm going to cover this all really quickly for you. So here's the thing. No one can tell you exactly if Pokemon or any market is in a bubble. The market decides that. The market tells us whether we were in a bubble or not. But if you believe in Pokemon as a hobby, if you believe in its growth and that it will be here 10 years from now, then you have nothing to fear. So if you believe that Pokemon is still going to be around in the next 5 years, 10 years, 15 years, then that's a winning market. That means that you believe that the hobby will continue to be strong and it will continue to grow. And if the hobby continues to grow over the long term, any of these bubbles, and when they pop, when these bear markets happen, that's a downtrend in the market, when prices go down, it's temporary. And eventually the market recovers and continues to move forward and up. So as long as you believe in Pokemon and that it will continue to grow, then that's a winning market. Now, because I have significant experience in business and finance, I'd like to look to the traditional sectors for analysis and inspiration. All right, let's look at the S&P 500, a major stock market index. The United States stock market has gone through some major bubbles and major recessions, but you'll see how in the long run, in the long term, they really meant nothing. And you'll see how if you bought even at the very peak, the top of any of those bubbles, and then you watch the price crash, but if you rode through all of those bubbles, you would be sitting on massive profits still today. I know this chart might look a little hectic, but don't worry, I removed most of my indicators so you can see it better. All you really need to do is just see the overall price movement. Just see where the lines are moving towards. First, we're going to go back to a recession in 1987. I know that's a long time ago. Don't worry, I'm going to go through this really quick. But in this recession in 1987, the prices had crashed to about 33% from the highs. And it basically languished there for about 4 years before prices finally started to break through. But what I really wanted you to see was this chart here. So this is from the dot-com era. So this happened in the early 2000s, so late 90s to early 2000s. And we're going to see down here at the bottom, which looks like nothing, looks like no activity. Down here, that's where the 1987 recession was. And you can see how it looks like nothing. It looked like nothing happened during that period. But actually, it was a lot of market volatility, a lot of things that was going on. Prices were crashing, and it looked scary at the time. But in the long run, it really meant nothing. And if you had held on during that period, and you had just rode out the wave, you see that the prices just continued to move up in a winning market. The prices recovered, and everything turned out okay for those investors. Now let's jump over to the most recent recession. And I think this is more relevant because a lot more people were around to see this and really experience what had actually happened. And that was the housing bubble that happened in around 2008. What you'll see here is prices had crashed below 50%. So if you had $100,000 in the market, let's say at that time, you'd have less than 50K out of nowhere. It just happened so quick and so fast. And that was due to the housing bubble. And you notice I'm talking about a bubble here. I really wanted to emphasize that because it's really important. But we had a housing bubble and it popped and the market crashed. But what happened after? Now, because we're in a winning market and a strong economy, here's the aftermath of the Great Recession or the housing bubble. you see prices recovered and then went on to continue to move upward to where we are today. Now, if we pull out these charts all the way back, and then you can see the entire picture, everything we just talked about, you're going to see the 87 recession down here, the dot-com bubble over here, and the housing bubble over here. And then suddenly we have where we are today, which is much higher. And you see all those things that happened below that, before that. It seems like insignificant. It seems like barely anything happened. But at the time, it looked crazy. And so if we go back to my phrase, bubbles in winning markets is nothing more than short-term volatility. Now you can actually see what I meant by that. What you saw were multiple bubbles. But because there was in a winning market, in the big picture, it was nothing more than short-term volatility. They were short-term bubbles that popped and then recovered. Yes, prices cannot always go up. We might be in a bubble now. But if you believe in Pokemon, if you believe in the hobby and then it will continue to grow and then it's going to be here in the future, then you really have nothing to fear. In fact, I have cards that have gone down in value recently, but I'm not worried about it. I'm not concerned at all. For example, I had just made a video a while back about some of the screen cards. The PSA 10 Pikachu, for example, this card I had valued at around $900 for quite a while, and recently I saw some sell for, I believe, around $700. The Psyduck PSA 10 as well, I had that price somewhere around, I believe, $700, and I saw them start to come down a little bit on recent sale prices. First edition Red Cheeks Pikachu, for example, this card has been flat for quite a while. It hasn't really moved in price in some time. But to me, these little price actions, these little dips and where ebbs and flows, where prices go up a little bit and they come down a little bit, I don't worry about those. I'm not concerned about that because I believe in the hobby long term. The price action that I just explained to you, to me, those are just those little candles at the bottom of the chart that I pointed out to you earlier. They're just how you look at the recessions, but then you look at the big picture, and it's just so small and insignificant at the bottom. Pokemon had its down years where you could have picked up base set Charizards for virtually nothing. But at the time, it seemed like high prices. It seemed like the end of the hobby and that people didn't know if it would survive. And now we look at those prices and we laugh. All markets go through cycles. Even the X and Y era, the notoriously overprinted X and Y era, has made a comeback and prices are on the rise. And if you want to make a comparison to something else, even sports cards from the junk wax era, that's the 80s and 90s, they were printed. If you want printed into oblivion, that is printed into oblivion. Even those have rebounded. I happened to read an article on ESPN talking about one of the most famous baseball cards, the Honus Wagner. That card is worth millions. And here's the quote. It says, back in the late 80s, that's 1980, the Wagner would sell for $10,000, $19,000, $23,000. And everyone back then said it was a bubble. Well, I sure wish I could have invested in that bubble. And I want you to realize, people weren't just saying that in the 80s, they were saying that in the 1990s and in the 2000s, every time the Wagner would set record prices. Now, I'm not saying or implying that Pokemon can ever reach that level. I don't know if Pokemon can ever reach the level of sports cards or not, but I don't know if you've noticed, but we've been saying a lot of the exact same things about Pokemon cards. Now, just to be clear, this doesn't mean that you should throw caution to the wind. You should always think about your investments, buy smart, and invest to the best of your ability. But if you believe in Pokemon as a hobby, if you believe in it long term and its growth and that it'll be here 10 years from now, then you have nothing to fear. Because bubbles in winning markets is nothing more than short-term volatility. I'm Kakashi with Kanto Capital. If you enjoyed the video, please like, subscribe, and tap that notification bell so you don't miss any brand new videos. Make sure you check out my channel page also for more awesome videos as well. Have a great day, and I'll see you next time.